Hey everyone, welcome back to Corporate Decoder, the place where we sift through all the corporate blah blah so you don't have to. Today we're cracking open a report that's about as exciting as watching paint dry, but stick with me because we're going to make it interesting. We'll be looking at the sector rotation fund and digging into what happened with their money in the last 6 months. Think of it like finding out if your friend who said they're a financial genius actually knows what they're doing with their investments. Now, before we dive into the numbers, if you're into getting the real story from these reports, make sure to subscribe and hit that notification bell. We also have a Discord community linked to the description below where you can chat with other investors. So this isn't your typical company we talk about. The sector rotation fund is a type of investment company. Basically, they take your money, pool it with other investors' money, and then buy a bunch of different stocks or bonds, or as we'll see, other funds. The idea is to spread the risk and hopefully make more money than you would on your own. This document is a report they have to give to their shareholders twice a year, telling them how they did. This report covers October of last year to March of this year. It's like a mid-year checkup to see if the fund is on track. Let's dive into some numbers. First, we need to know the fund cost. Imagine you put $10,000 into this fund. How much would it cost you to have them manage it? According to the report, for every $10,000 you invested, you paid 94 as in costs for those 6 months. This is also shown as a percentage, which is 1.91%. This percentage, called the expense ratio, is important because it tells you how much of your investment goes towards paying the fund's managers and other expenses. The lower this number, the better for you, the investor. Next, what did the fund actually invest in? This fund uses a sector rotation strategy. The sectors are broad areas of the economy, like technology, healthcare, or energy. The fund tries to figure out which sectors are likely to do well in the near future and then invests in those sectors. The report shows a breakdown of their investments, with the biggest chunk being in technology at almost 18%, then industrials and financials. It means they believed those areas of the economy were going to do well. But a lot of the portfolio is concentrated in just a few holdings. This could be a problem if they're wrong. Looking at the top 10 holdings, it's clear they are using ETFs, exchange-traded funds, to invest. ETFs are like baskets of stocks that track a particular index or sector. For example, their biggest holding is the Vanguard Communication Services ETF. This means they aren't picking individual stocks in the communication sector. Instead, they're betting on the entire sector for this ETF. These top 10 holdings make up most of the fund's investments. Let's look at some other key numbers. The total net assets of the fund are about $36.4 million. This is the total value of all the investments the fund holds, minus any debts. They hold 10 investments. The advisory fees they paid to the people managing the fund were over $193,000 for the last 6 months. Finally, there's the portfolio turnover rate. This is a measure of how often the fund buys and sells its investments. The turnover rate is almost $133,000 for the last 6 months. Finally, there's the portfolio turnover rate. This is a measure of how often the fund buys and sells its investments. The turnover rate is almost 113%. That means the fund is actively trading, constantly buying and selling investments. This can lead to higher costs and potentially more taxes for investors. The turnover rate is almost 13%. That means the fund is actively trading, constantly buying and selling investments. This can lead to higher costs and potentially more taxes for investors. Here's the breakdown of what they owned. This schedule lists all the fund's investments at the end of the reporting period. It shows the name of each investment, the number of shares they owned, and the value of those shares. We see here the biggest holding is Vanguard Communication Services ETF, worth $6.6 million, and then Vanguard Consumer Discretionary ETF for $5.5 million. It gives you a transparent view of exactly where the fund's money is invested. This statement gives you a snapshot of what the fund owns and owes at a specific point in time. It's like a balance sheet for the fund. On the asset side, we see the total value of their investments, which we already know is $36.4 million. Then we see a few other smaller assets like interest and dividends they're owed. On the liability side, we see the expenses they haven't paid yet. The difference between the assets and liabilities is the net assets, which is the same number we saw earlier. This statement shows how much money the fund made or lost over the reporting period. It's like an income statement. First, it shows the fund's income from dividends and interest, which is around $238,000. Then it shows all the expenses, including advisory fees. The fund had more expenses than income, resulting in a net investment loss. However, the big driver of performance is the gains or losses on the fund's investments. It shows a net realized gain from investment transactions, but also a net change in unrealized appreciation, which is a fancy way of saying the value of their investments went down. This section sums everything up and shows how the fund's net assets changed over the period. It starts with the net assets at the beginning of the period. Then it shows the increase or decrease in net assets from operations, which we saw in the statement of operations. It also shows any distributions paid out to shareholders. Finally, it shows the increase or decrease in net assets from capital share transactions, which is money coming in from new investors or going out to investors who are redeeming their shares. These numbers show how the fund performed for investors over different time periods. It's the percentage change in the fund's share price, assuming all dividends and capital gains were reinvested. This is often considered the most important number because it tells you the total return you would have received as an investor. We see the total return you would have received as an investor. We see the total return for the last 6 months was a loss of 215%. Last year was a gain of nearly 33%. Like any investment, this fund comes with risks. They must describe risks that may occur. These are things that could cause the fund to lose money. One risk they highlight is cybersecurity. With everything online these days, there's always a risk of hackers stealing data or disrupting operations. Another risk is foreign securities risk. Because the fund invests in ETFs that may invest in foreign companies, it's exposed to risks like changes in currency exchange rates or political instability in other countries. Investments in ETFs that may invest in foreign companies, it's exposed to risks like changes in currency exchange rates or political instability in other countries. Investments in ETFs expose you to other things that can go wrong. There's always manager risk, the ability of the manager to choose the best investment. This means it's important to trust the people making investment decisions and also general market risk. Finally, the report talks about the board approving the agreement with the company that manages the fund. This is a standard thing they have to do, and it's basically the board saying they think the management company is doing a good job and charging a fair price. Now, let's step back and look at what all these numbers mean. The fund invests in sectors they think will do well by buying a basket of stocks via exchange-traded funds ETFs. While this is efficient, it's also costing investors money as the fund hasn't performed as well as it could have in the last 6 months, with losses on their investments. While last year was a good year, we can see that there is a lot of change here. The risks they describe are also very general and every fund has them. Is this fund worth your money? It would be up to your own risk analysis. Alright, that's our deep dive into this shareholder report. What do you think about these funds' performance and strategy? Do you see any red flags? Drop your thoughts in the comments below. If this video helped you understand what's going on with this fund, make sure to hit that like button and subscribe for more corporate decoder videos. Also, don't forget to check out the Discord channel in the description for more discussions. Thanks for watching, and I'll see you in the next video.